Hello again. I'm Katrina, the advisor, coming to you today to talk to you about this new IRS tax form called the Schedule 1A. It has been released, and part of the reason is exciting. I'm really excited about this form is because it contains a lot of the changes that were slated to come out that came from the Big Beautiful Bill. Most of the changes in that bill are really related to business owners, except for this form. This form is related to you, the individual taxpayer, and it has some great savings in it. But I want to talk to you about what it really means and how does that really impact you, because you'll see the amount of savings that you can actually receive and wonder, well, why didn't I get all of it? Well, there's a catch to some of these things, right? So I'm going to pull the form up and walk you through it, and just so you can actually see in real time what this form provides and some of the changes and some of the nuances of this form for the most part, shall I say. So let's jump right on in. And you see the form on my screen. It's called the Schedule 1A. And the reason that is it's a combination of two forms. There's already a Schedule 1 that's being used. We've been using that for probably since 2018. And it's Schedule 1 that pulls in all of your income. It basically says this is from rental income, this is from your Schedule C, this is from this, all the income streams, right? Well, the Schedule A is your itemized deduction form. So that's usually where you take your charitable donations, your medical and dental out-of-pocket costs, your interest on your primary and secondary residence, the property taxes, all of that happens on that Schedule A for the itemized deduction. So they combined this form and called it a Schedule 1A because it's using your income along with additional deductions. I like it, right? All right, so let's talk about what's on this form and how it's going to impact you this upcoming tax season, right? So you'll notice that it says 2025. So this is for the new year coming up in a few months so far, right? So you'll see part one has modified adjusted gross income. MAGI is the abbreviation of that. And basically, that's all of your income combined, modified adjusted gross income. So you'll see on line one that they'll pull that information. We'll pull that information in from your 1040, your 1040 SR, which is a senior return, or your 1040 NR, non-resident return, right? So all of that information goes in here. The additional income is income that any income from Puerto Rico that you excluded. And then you'll also have income from these additional forms, Form 2554, 50, and 4563. But for the most part, this section here is going to pull in your adjusted gross income, right? All your income combined. And the reason that's important is because all of these deductions that are that you qualify for on this form are income based, right? So, and I'll talk about what that looks like right quick, right? So in part two, there's no tax on tips with a limitation. You notice I looked right in the click camera. There's no such thing as no tax on tips. There's a limit to everything, right? So there's no tax on tips up to $25,000, right? But that's also has an income threshold. So this is why this modified adjusted income section is up here, because these credits are in alignment with where your income is at. The IRS typically has thresholds for everything, income thresholds. A lot of the credits and deductions are geared towards lower income. Once you start to hit those higher income levels, that credit either starts to go down or go away. And that's why this section starts off with this MAGI amount, this modified adjusted gross income amount, because these things are still going to have that income threshold included, right? So we'll talk, so that no tax on tips on line 4 pulls in all of your qualified tips, right? It says right here, Form W-2 Box 5 is 176,100 or less. Enter qualified tips included on Form W-2 Box 7. So you're going to enter all the qualified tips up here, and then you'll see when we get down here to line 7, you're going to enter the smaller of the amount on line 6 or $25,000. So you're going to either get what's the smaller amount from here, or you're going to that you actually earned in tips, or you're going to get up to 25,000. But then you'll notice if we go down even further, enter 150 or 300,000 if married filing joint. But then you'll notice the line below that says subtract line 9 from 8 if 0 or less. So this income is going to shift whether you're going to get that full 25 or the smaller amount, right? So there's income threshold limitations that are going to impact how much of these credit deductions that you're going to be able to get. So that's on the no tax on tip, $25,000. And this credit is actually good. This deduction is good through 2025. These are limited time deductions. They're not permanent like the child tax credit. These are limited time deductions, right? But you're good for 3 years, right? So if you qualify for this one, you can get up to 25,000, but remember that $150,000 income threshold or 300,000 if you're married filing joint is going to impact how much of that you received. And if you had tips that were less than the $25,000 amount, then you're going to get the lesser of that. This is why you have to enter your income before this amount. And it says enter the smaller of the amount, right? Or 25,000. So up to 25,000 on the no tax on tips, good through 2028. But remember, there's an income threshold limitations there as well. That's part 2. Part 3 is no tax on overtime, right? So the no tax on overtime, pretty much same thing. It has some income limitations. It has some limits there. So really, this amount is up to $12,500. So here you're going to enter in on line 14A. It says qualified overtime compensation included on Form W-2, Box 1. And then in line B, it says qualified overtime compensation included on Form 1099 NEC. NEC is for non-employee compensation. This is typically for independent contractors, right? So that's box 1 or Form 1099 miscellaneous. This particular form is usually for rent payments, miscellaneous income. Not that you're not a independent contractor, but you were paid for something, right? Miscellaneous income, additional income, but it's not like you were a contractor. So you'll typically see this for rents and royalty payments and things like that. So these forms are going to get pulled in here as well. But you'll see enter the smaller of the amount on line 15. It says enter the smaller of the amount on line 14C or 12,500. 25,000 if married filing joint. So that is the limitation right there. So 12,500 if you're single, up to 25,000 if married filing joint. But if you notice, if we go down to line 17, it says enter 150,000 or 300,000 if married filing joint, because this is the income threshold, remember? And then you'll see right below that, it says subtract line 17 from 16. If 0 or less, enter the amount. So you may get the full amount, but you may not, right? So this just shows you how those income limitations or those income thresholds play a part into how much of these deductions you're going to be able to take. It's up to this amount, but that doesn't mean that you're going to get that full amount each time. It's based upon all of these other criteria, right? All right. So part 4 is no tax on car loan interest. So everybody won't qualify for the tips. Everybody won't qualify for the overtime, but most people are going to qualify for this car loan interest, no tax, right? Now, this also has a limitation as well, but a couple things that you're going to need. You're going to need your vehicle identification number, your VIN number. This deduction works in a couple ways, right? So you'll see right here in this section right here that it has deduction on Schedule C, Schedule E, or Schedule F. This is if you took that deduction in the business. This is if you're an individual and you're taking it on this form, right? So Schedule C are typically for sole proprietors or single member LLCs. Schedule E's are typically for rental income, S corps or partnerships, and Schedule F's are typically for farmers, right? So this is what that section is for. But this Schedule 1A is this actual form. So anybody can qualify for that if they've got car loan interest that they want to take deduction on, right? But you'll see here on line 24, enter the smaller of the amount on line 23 or $10,000. That's the limit right there, right? And then you'll see on line 26, it says enter $100,000 or $200,000 if married filing jointly. That's that threshold, right? We got to use that income to determine how much of this credit how much of this deduction you're going to actually have to get. You'll notice I'm keep saying credit, but then I'll fix it to say deduction. because credits are usually refundable, money that you can get back. These are deductions. These only lower your tax, how much you're going to pay in taxes. This is not money back in your pocket. This is money that actually lowers how much you're required to pay on taxes. Could it ultimately result in a refund? Yes, if you have credits in other areas that are greater than your tax. Let's say, for example, this brings your tax liability down to $1,000. But let's say you've already prepaid to the IRS $2,000. So you'll get that difference back in a refund. But let's say that this brings your tax liability down to $1,000. You've already paid them $500. So you still have a $500 difference that you would need to pay, right? So this is not money back as far as a refund. It could be ultimately on the back end, but what this does is just lower how much you're taxed on. Okay. Just wanted to say that. And then part 5 of this form is the enhanced deduction for seniors. So anybody over 65 could qualify for an additional $6,000 deduction, but you'll also see here the thresholds on the income, right? So you'll see on line 32, it says enter 75,000 or 150,000 if married filing joint. But then on line 33, it says subtract line 32 from 31. If 0 or less, enter $6,000. So if you add all of this stuff up, and like here in part 6, if you add all of these deductions up, if you qualify for the maximum amount on each one of these deductions, it would be $53,500. Most people aren't going to qualify for 100% of any of all of these, but most people are going to get one of these benefits on additional tax savings for 2025. So I'm excited about that part, if nothing else, right? Because money back in your pocket right now is so important. I feel like we're in a silent recession that's getting louder. And tax savings is going to be a key piece because this impacts more of our money than anything that we deal with, right? You get taxed on pretty much everything. So most of your income that comes in has been taxed before you even receive it. So any savings that we can get in this area, we're going to jump on it. I will be coming back to you to talk to you about more of these changes that happen with the Big Beautiful Bill. Some I'm a fan of, some I'm not, and I will let you know which ones they are. I'm very transparent in that. And I look forward, and if this information was helpful to you or you have any questions, feel free to drop them in the comment section below. I will be back. I would love for you to like, subscribe, and follow and for more updates. And I will be back to you soon with additional tax, business, and life information. I'm Katrina, the advisor, and I'll be talking to you soon. Have a great day. Bye-bye.